Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 4, 2023. Europe, the benchmark stock 600 saw a slight increase, although trading volume was significantly lower than the 30-day average. Real estate shares were among the top performers, while J. Sainsbury plc experienced a decline as the UK grocer's unchanged pre-tax profit forecast fell short of analysts' expectations. Turning our attention to Asia, Japan's Nikkei 225 retreated from its highest level since 1990. On the other hand, Pakistan's rupee gained ground against the dollar, fueled by optimism surrounding the International Monetary Fund's bailout package, which is expected to boost demand for the nation's assets. As for the United States, there was no cash trading in equities and treasuries due to the holiday. However, futures on the S&P 500 and the Nasdaq 100 showed minimal changes. Looking at the broader market sentiment, Citigroup Incorporated strategists cautioned that some equity positioning appeared stretched. The surge in bullish bets on U.S. stock futures during the end of June has left the market vulnerable to a potential pullback. The strategists particularly highlighted the Nikkei as the most extended market overall. Consequently, investors may take measures to safeguard their gains in the coming week, considering the significant run-up in prices. Meanwhile, signs of a cooling U.S. economy and continued hawkish central bank rhetoric have led investors to adjust their expectations for stocks in the remaining months of the year. Market participants eagerly await Friday's non-farm payrolls report, which will provide valuable insights into the trajectory of monetary policy. Another factor that will come into play is the upcoming earnings season, set to commence next week. With an increase in profit warnings leading up to this period, investors will closely monitor company performance for signs of resilience. Luca Paolini, the chief strategist at Pictet Asset Management, expressed caution regarding equities due to the prevailing muted economic backdrop. He highlighted a disparity between earnings expectations and leading economic indicators, emphasizing that this gap will eventually need to close. According to Paolini, either the economy must rebound, which he deems unlikely, or equities will need to reprice. Shifting our focus to Australia, the Reserve Bank of Australia decided to keep its key interest rate unchanged at 4.1%. This decision aligns with the predictions of 19 out of 32 economists surveyed by Bloomberg. As a result, the yield on the nation's 3-year bond saw a reduction in gains, and Australian equities experienced an uptick. Moving on to other news, Chinese non-ferrous metals firms witnessed a surge in their share prices following the Chinese government's imposition of export restrictions on gallium and germanium. This move signifies an escalation in the trade war on tech with the United States and Europe. Gallium and germanium play a crucial role in the semiconductor, telecommunications, and electric vehicle sectors. As we look ahead, it will be essential to monitor key events throughout the week, including China's Caixin Services and Composite PMI, the Eurozone's S&P Global Eurozone Services PMI and PPI, the OPEC International Seminar in Vienna, and the release of minutes from the FOMC's June policy meeting. Tesla, the electric vehicle, EV giant, made a significant splash in the market with its shares skyrocketing by 6.9% yesterday. The surge came after the company reported an astounding 83% year-over-year growth in deliveries during the second quarter. This impressive performance not only boosted Tesla's stock but also had a ripple effect on other EV makers. Rivian, the American EV manufacturer, saw its shares jump by 17.4% as it reported 12,640 deliveries in the second quarter, marking a 59% increase from the previous quarter. Similarly, Speng, a Chinese EV maker, experienced a 4.17% climb after delivering 23,205 vehicles in the second quarter. This marked the company's first increase in deliveries after more than a year of declines. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. The electrifying growth in the EV market reflects the increasing demand for electric vehicles worldwide. As concerns over climate change and sustainability continue to grow, consumers are increasingly embracing EVs as a viable alternative to traditional gasoline-powered cars. In other news, the European Union, EU, expressed its intention to strengthen cooperation with Japan in the areas of artificial intelligence and semiconductor chips. EU Commissioner Thierry Breton met with Japanese government officials to discuss the partnership. The EU aims to diversify its technological collaborations, reducing its dependency on China. Meanwhile, Twitter's competitor, Blue Sky, experienced a surge in traffic over the weekend after Twitter temporarily limited the number of posts users could view per day. Blue Sky, backed by Twitter co-founder Jack Dorsey, is still in its beta phase and saw record-high traffic during this period. The move by Twitter was attributed to extreme levels of data scraping. As for the global financial markets, trading activity remained muted yesterday due to the 4th of July holiday in the United States. Major U.S. indexes inched up slightly, with the S&P 500 advancing by 0.12%, the Dow Jones Industrial Average remaining flat, and the Nasdaq Composite adding 0.21%. In Europe, markets mostly traded lower, while Asia-Pacific markets showed mixed results. China made headlines as it restricted the export of gallium and germanium, two metals crucial for semiconductor manufacturing, citing national security concerns. This move comes in response to the U.S. curbing the export of key semiconductor technologies to China and urging its allies to do the same. The ongoing chip wars between major economies continue to escalate. Shifting our focus to Australia, the country's central bank decided to leave its interest rate unchanged at 4.1%. The Reserve Bank of Australia described inflation as having passed its peak, a comment that was well received by the markets. The S&P/ASX 200 responded positively, adding 0.5% in response to the decision. Wrapping up, the electrifying growth in the EV market, led by Tesla's impressive delivery numbers, has sent shockwaves throughout the industry. As Tesla's shares soared, other EV manufacturers such as Rivian, Spang, and BYD also experienced increases in deliveries and a subsequent boost in their stock prices. Some of the main moves in markets today. Stocks. The Stoxx Europe 600 rose 0.2% as of 10:07 a.m. London time. S&P 500 futures were little changed. Nasdaq 100 futures fell 0.1%. Futures on the Dow Jones Industrial Average were little changed. The MSCI Asia Pacific Index was little changed. The MSCI Emerging Markets Index rose 0.3%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro fell 0.2% to $1.0895. The Japanese yen rose 0.2% to 144.38 per dollar. The offshore yuan rose 0.4% to 7.2241 per dollar. The British pound was little changed at $1.2694. Cryptocurrencies. Bitcoin fell 0.7% to $30,918.05. Ether fell 0.4% to $1,950.41. Bonds. The yield on 10-year treasuries was little changed at 3.85%. Germany's 10-year yield advanced 3 basis points to 2.46%. Britain's 10-year yield was little changed at 4.43%. Commodities. Brent crude rose 0.9% to $75.35 a barrel. Spot gold rose 0.4% to $1,929.65 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.